The JSE All Share Index has risen over 1%, attempting to rebound from a 5-day losing streak that sent the index to the lowest point in 2 weeks. Meanwhile, investors remain focused on looming monetary decisions from both the Federal Reserve and the South African Reserve Bank later in the week. Thabiso Mamathuba is an investment analyst with FNB with us now to talk about all of this. Thabiso, welcome back to Daytime Update. Give us first an overview of local trade and how the Rand in particular is doing as we approach lunchtime.
Yeah, so we're seeing the local markets just kicking off today's trading session on a positive note. This was led by mostly financials as banking shares and non-life insurers sort of advanced, while industrials also edged higher so far after Richmond contributed the most to the top 40 index, while Naspers also gained in early trading session. So obviously this was offset by a weaker showing so far from the resources counters, with minus so far leading the declines and, trading in negative territory and just adding to the previous day's losses. But then with regards to the Rand, so far it is trading just, slightly better against major currencies, although it hasn't recovered much after its recent decline. So the local unit is trading around 17 Rand and 73 cents to the US dollar. However, markets remain super sensitive this week, obviously ahead of the US Federal Reserve Bank's rate decision, as well as the South African Reserve Bank's interest rate hike on Thursday.
And the leading business cycle indicator for us here at home has fallen 1% month on month. That was in July of this year. How should we read that data and what are the implications?
Right. So, yeah, this was the biggest decline in 10 months as 6 of the 10 available components time series decreased, while only 4 of those components increased. So the largest negative contributors to this decline were rather a decline in the number of residential building plans approved, as well as a decrease in the composite leading business cycle indicator for the country's main trading partner countries. However, the largest positive contributors were an acceleration in the 6-month smooth growth rates in new passenger vehicle sales, as well as the widening of the interest rate spread. So obviously this continues to show overall slowing economic growth, or rather slowdown in economic activity, and is obviously, further exacerbated by slower global economic activity as well.
PepsiCo has now stopped making Pepsi, 7-Up, as well as Mountain Dew for the Russian market. Many other companies have withdrawn from their business interests in Russia, especially just after the invasion of Ukraine in February. Why has PepsiCo made this decision now?
Correct. This was not entirely unexpected, and obviously this comes after the food and beverage giant announced earlier this year, together with a number of companies, as you've mentioned, Tembekile. So, they did mention that they would suspend sales and production after the invasion of Ukraine by Russian troops. So, in the company's latest update, management sort of stated that the production of all beverage concentrates have been stopped, and, but obviously it remains uncertain whether the actual sales of these products have also been discontinued. But we know that the company's main rival, Coca-Cola, continues to operate in Russia, even though it has also stated that it would discontinue operations. But obviously it's worth noting that, there were no sanctions against food and beverage supplies in Russia since the onset of the war in Ukraine. But it would be interesting nonetheless to see what the impact of this would be on the company's sales and bottom line going forward.
Global miner AngloGold Ashanti is expanding its interest now and is looking at a prospective mining region in the south of Nevada, that's in the United States. Why are they going there? What are they hoping to extract?
Right. So, the company just came out with an announcement late yesterday, and they said that they will acquire properties and enhance development potential in the BT district of Nevada in the U.S. This is for an amount of $150 million. So the company believes that this acquisition further enhances the value proposition that the group is building in the BT district. The company currently holds about several exploration construction and development assets in this particular district, the first of which is only expected to realize value in about 3 years' time. So overall, the deal does look a little bit expensive on the face of it, but we believe that the potential synergy gains should be meaningful, and further exploration may also yield additional resources, which would obviously change the deal metrics. But the deal will be internally funded from the company's resources, and they're obviously enjoying some balance sheet flexibility currently. So there's enough capacity to fund such acquisitions.
Thabiso Mamathuba, always good to speak to you. Thank you very much for your time, ma'am.